Good morning, Salaam Alaikum. I hereby welcome you all for the analyst and the investor presentation of Al-Madina Insurance Company SAOG for H1 2022. I am Hitesh Popat and designated Investor Relation Officer. With me joined today is our CEO, Mr. Osama Al-Barwani, Acting Deputy CEO, Mr. Shakib Mahmood, who is also the CFO of the company, and the Head of Internal Audit and Sharia. This is our first presentation to the market through MSX, and we thank MSX for providing us the opportunity to meet and interact with analysts and the investors. Moving on to our agenda for today. Firstly, will be the company overview, followed by the company's financial performance overview. Moving further to the H1 2022 results. Next will be the outlook, followed by a Q&A session. I would now request Mr. Shakib, our Acting Deputy CEO, to take the floor from here.
Thank you very much, Hitesh, and welcome to you all. Many people are there. I just see only one guest. Maybe the time factor is such that you are all busy. Well, let me take you through the company overview. Although people do know us, we've been around for 17 years, but this has to be done. So the vision of the company is to be the leading insurance company in Oman, where the leadership is measured not only by profitability to stakeholders, is the satisfaction of the customers and commitment to its employees. So it's three ways. We look after the customers, shareholders, and our employees. That's our vision. The mission is to provide cost-effective insurance solutions and superior customer services in a manner which is compliant with Sharia. Here, the emphasis on compliant with Sharia because we are one of the two Takafful companies in the market, and we tend to become cost-effective, not the cheapest. We want to keep the superior customer service and the Sharia in the forefront. The values are innovations, continually to see your requirements, innovate new products, do better service, social responsibility, transparency in all the things in our transactions which we do, integrity and teamwork. The brand evolution which the company took, I will take you through very quickly. The company was established in 2006 in Oman. Al-Madina was previously a closely held company, it was converted into a fully fledged Takafful insurance company in 2014. Al-Madina writes a mix of businesses, general, health, family, etc. The milestone number 2 is company is among the top 3 insurers in Oman. Primarily, we deal with corporate, government, business, as well as personal lines insurance. And the company has 10 branches. This includes 7 full-fledged branches, 2 claim hubs, and 1 sales hub, which is situated in Quran. The third milestone is the first Takafful company in Oman with a paid-up capital of 17.5 million. As against a minimum requirement of 10 million real money. So we are very comfortable on our share capital base. We strictly adhere to the Sharia principles in the company, and of course, in the Takafful company, we have a Sharia compliance board, we have an internal Sharia auditor, external Sharia auditor, and on top of it, the CMA has its own Sharia guidelines, which they monitor us on too. Al-Madina is a company which has remained profitable consistently for the last 6 years, and we have been paying dividend. And for last 7 years, we have been a SAOG company. Before that, it was a closely held company. We are into the 17th year of our operation. It's still growing, it's still evolving, and it's still doing good service and doing the right thing. The journey of the company so far, in some ways it is covered, but let me take you through 2005. There were some prominent personalities of Oman who conceived this idea to have a Takafful company in Oman. At that time, there was no Takaful law, the Islamic banking was not there, the insurance was not there. So what they did, they floated a closely held company, SAOC, and the name at that time was Al-Madina Gulf Insurance SAOC. But it was largely compliant with the Sharia principles. Although it was formed as a conventional insurance company because the law was not there and law did not allow at that time to have a Takaful company. Moving forward in 2006, Al-Madina Gulf Insurance Company took its Chamber of Commerce license, etc. In August, they started working as a full-fledged company. So basically, it came into play in 2006 in the previous birth. 2014, the company was converted into a Takaful insurance company, and IPO was floated into the market, and the IPO was hugely successful. It was subscribed by 2.5 times of the share capital. In 2015, Al-Madina Takaful made a strategic investment in National Takaful Company Wadaniya in Abu Dhabi. Although it's not a subsidiary or it's not an associate, but it's a strategic investment which the company decided to keep. In 2021, the Trump and Hillary, the Al-Madina company grown into a US $115 million company with 7 branches to claim hubs, etc. Its market share is 11%. And it is third largest insurance company in terms of gross written contribution. And as we speak in 2022, the story continues. We are looking for a balanced and stable portfolio across all lines. Our story continues. We set new challenges and chase our dreams to become the largest and providing Takaful Sharia-based product to our customers. The customer satisfaction remains a top priority for us. Well, in terms of business, we are in the business of risk management. So we take risk, we mitigate risk, we transfer risk. The vision is harmony with its all stakeholders, be it the shareholders, employees, all policyholders. So create an harmony there. As I told you earlier, companies engage in general, family, and medical business under the Wakala and Mudarba model, which is the Sharia principle of doing business. One of the largest insurance company which does energy and power insurance. Second largest health insurer in the market. We have superior customer experience, and that's why increased customer loyalty. So the customer keep on repeating us. If they come to us, they do not want to leave us. Somebody asked me what is the benefit of doing a Takaful company, although there are so many restrictions on how you do your business. But the simple answer is the benefit is doing the right thing, the way the Sharia requires. That we provide opportunity for the policyholders and participants to take insurance from where the Sharia principles are applied. So that's the best benefit of a Takaful company. We are one of the leading Takaful company providing bank assurance services with all Islamic banks and their windows, etc. And we have clientele across businesses, may it be government, corporate, or retail. We take pride in our very efficient claim service, which we provide to our customers. And we probably are the only, and I'm taking all conventional and Takaful insurance company to have settled one of the largest claim in the history of insurance, about 100 million Real money, to one of the aluminum company a couple of years ago, and very successfully without taking any hit on our profitability, without giving any heartaches to the customer. Our valuations are done by actuary on a regular basis, and we follow the best international practices, apart from following the IOP and the regulation of CMA, and if as a residual risk, the IFRS. The Takaful company, as I said, has a lot of challenges in terms of continue to act under various Sharia compliance regulations, the Sharia board, the solvency requirements and operations. Actually, our regulations are a little bit harder than what the conventional are. To start from the operations, we are supposed to maintain accounts separately. So for the shareholders, a separate account, the participant or policyholder, a separate account. Within the participant account, you need a general, family, and now even the medical has to be separate as per the requirement of CMA. Not only the accounts, and that's why some of you who analyze our accounts or the Takafful accounts fail to understand that the company has to be seen in totality. If you just take the shareholders and shareholders' profitability and their balance sheet, you are not looking at the complete picture. Although we require to maintain everything separately, but it has to be looked at as a holistic overall company. We have to maintain even the bank accounts separately for all the above, which I said, shareholders, policyholders, general, family, and medical now. If there is a deficit in any of these accounts, there are regulations that the shareholders will have to make those deficits good. So all participant funds have to be in profitable condition. There is a restriction on us to do business only with Sharia compliant products. So we cannot do, for example, liquor or anything of that sort. This is haram under the Islamic principles. We have to go to the Takafful reinsurers only for our reinsurance arrangement. And they are far and few. Their capacities are smaller. We end up paying them more in comparison to the conventional reinsurers. So those are the operational challenges which we face. In terms of the Sharia compliant, there are, in terms of investment, there are very limited opportunities for investment because not many companies are Sharia compliant. We can only invest in the companies or sukuks which are Sharia compliant. And not only invest in them, we have to continually monitor them. If a company is today a Sharia compliant company, we invest into it. 6 months later, it becomes non-compliant. We have to immediately exit. And exit could be at a loss. But the Sharia principle has to be paramount, and we have to comply with that. Profit yield on Sharia compliant products in terms of the investments are lower than what the conventional deposits are there. But the basic reason is that many companies are there, the population is more in there, the Takafful and the Sharia compliant products are much lesser, so we get less of the return on that. There is a requirement to have a committee, Sharia supervision committee, internally, and as I told you, we have to have an internal, external audit, the CMA's audit, the Takafful law, and all that. So that's another challenge for us to continually monitor our investments and operations. In terms of solvency also, the solvency for the conventional companies is that they have to manage solvency only as a company. So on an overall basis, if they're solvent, they're fine. But for us, it has to be general business, general Takafful separately, family Takafful separately, and medical separately. We have to remain solvent in all the three independently and as a whole. You see, in one company, there are 3 or 4 companies operating, and yet we are one single company. So that we have to continually monitor and be always solvent. There's a new solvency, risk-based solvency, which has come out. CMA has come out with risk-based solvency calculation, which will be even more tedious, not only for us for the conventional, but it will be more because we have to manage 3 times the solvency in there. So these are the challenges basically on Takafful. If you have any questions, you can stop me now or later when we will keep the floor open for any questions related to that. I don't mind. I'm happy to answer anytime you ask me a question. Now, in terms of the general mix of business, our company is largely very well distributed in all sorts of businesses. If you see, our medical is 14% last year, 17% motor, 63% non-motor, and life 6%. When I say non-motor, it has all the others put together. We have fire, property, engineering, marine hull, marine cargo, CAR, energy. Everything is bundled in there together, and that's why it's 63%. Otherwise, if you divide it into various smaller bits, it will be again 10-15% each. Q2 2022, we remained almost the same. The only thing is that we are slightly shifting towards motor, and motor is 22%, as against 17 last time, and non-motor has reduced from 63 to 53. And this is a deliberate effort. If you see down below, we have our distribution channels. We have 2% business coming from agents, 40% from the brokers, 15% co-insurance business, 37% direct, and bank and ministries about 6%. So if you see, there is a balance between direct and indirect business almost equally. In terms of profitability, line-wise profitability, all our businesses are profitable, i.e. there is no requirement of PDR so far in the company, and we hope we won't have it in the future as well. We have our profitability from motor 33%, from life. Life is always a portfolio where you have a very thin margin, it's 2%, medical 19%, and motor 46%. In 2022, Q2 is a similar kind of profitability. Medical has reduced from 19 to 11, and the main reason is that during the COVID period, people were not going to the hospitals and delaying their planned surgeries and visits, etc. Now they are back into the hospital, so it has reduced a little bit. Life has gone up from 2 to 4% because there were a lot of COVID deaths in 2021. So that was coming in there, and that's the reason of this change. Any questions? Well, in country value, Al-Medina is strongly committed to in-country value, and it's embedded in our business model. We have exceeded the accomplished legally mandated urbanization percentage, both in terms of Ministry of Labour and CNA, quite convincingly. I think we are 78, and the requirement is 70 and 75. We recruit and train Omani nationals continuously. The majority of our employees are Omanis and very little expatriate. Business relations all significantly in Oman, except for the Tekaful companies outside. We are very active in terms of the CSR and donation within Oman. More than our 85% of the investment we like to keep within Oman, with the Omani Islamic banks, companies, the sukuks, etc. So in terms of the in-country value, the company is committed to contribute to the Omani economy and to development of the Omani nationals. That's our first goal to achieve here. Here's an overview on companies' performance over the years, starting from 2007 to 2020-21. And if you see, we have grown from 3.8 million of the gross contribution company to 44.12 million riyal money, and in year 2022, we believe that we will be at the same level, if not more. Again, the graphical presentation of the past performance from 17 onwards. For last 5 years, our retained gross contribution is, you see, Manhattan is increasing. The underwriting results always increasing from 4.3 to 5.994. This is a good parameter of health of a company. You see the growth in one trajectory. Investment and other income is also increasing from 2017, from 334,000 to 1.3 million last year. If you see the total profits, take the box this side. Yeah. If you see the profits have also been increasing from 2017 to 2020. quite a bit. From 670 we have gone to 3 times actually, using 1.8, almost approximately. This is 3 times in 4-year growth in terms of the profits. 21 was a blip, and that blip was largely attributable to the Shaheen hurricane which came in here, and we had to settle lots of big claims in there. And we wanted to be quick, we wanted to do good service. We went to the affected areas, opened up our kiosks there to do service. And if this was not for Shaheen, we would have at least equate 2022 performance or maybe exceed a little bit by 100,000. So that's the reason for the blip. In terms of the returns to the shareholders, this graph shows profit after tax starting from 2015, i.e. we're talking about last 7 years. If you see in 2015 we have almost a 900,000 loss. From there we came in 2020 1.8 million profits. So profits are continually increasing. We are in an insurance business, we take risk, and yeah, we service people. If there are instances where we cannot control, like Shaheen and Gonu earlier, etc., that is beyond anybody's control, the force majeure. But otherwise, the company has continuously grown over the years, and we have been paying dividends for the last 6 years to our shareholders, from 4% to 10% in 2020. In 21, we paid 7.5%. So if you see in last 6 years, we have returned almost 38.5% of the share capital to the shareholders. So the PE, if somebody has to, or an analyst listening to me, if you have to work the PE, the thumb rule roughly is about 14, 15, which works out to a very good, cheap investment. This graph on the top shows the shareholder fund and participant or policyholder fund profitability. As I explained to you earlier, we have to be profitable in both. If we are doing one place profit and the other place loss, that means we won't be able to pay any dividends to the shareholders. And you would see one of our competitors, he has profitability in one aspect of the business and losses in the other. They have not been able to pay anything back to the shareholders, because when the payment of dividend comes into play, the regulators and even the standard setters see the company as one holistic body. Then the shareholders and policyholder disappear. So the balance is that you have to have profitability in both, and you have to have profit on an overall basis to be able to pay dividend or return to the shareholders. We were not doing so in the earlier years, 15 and 16. You see there's a profit in shareholders, but there's a loss in the participant funds. But from 17 onward, we fine-tuned our business in such a way, and we fine-tuned our wakala charges in such a way that the participant fund are in profit, the shareholders are in profit, and overall company is in profit. And that's why we would pay dividend to our shareholders continuously for the last 6 years, and inshallah, maybe this year as well. If you go down and you see the return to shareholders over the last 6 years, this is absolute number and not percentages. So it's from 700,000 to we have paid 1.7.5 million. Overall, we have paid 6.7 million Rial money back to the shareholders in a very short span of 6 years. So almost 39-40% has gone back to the shareholders. So that's how we have managed the company over the years. And for the H1 2022 for 6-month results, I'll ask Hitesh to take you through the numbers. If there are any questions, I'm happy to answer that anytime.
Thank you, Mr. Shakir. As the economy recovers the post-pandemic, Al-Madinah continues to maintain similar gross contribution as compared to the corresponding period. A 3% increase is noted in the net retained contribution, as well as a corresponding increase is also noted in the net earned contribution. This increase is mainly on account of the change in the business mix, which was briefed by Mr. Shakib earlier, that Al Madina has been voluntarily changing the business mix, the kind of business what we are writing. And increase of 22% has been noted in the incurred claims. That is the main reason being the businesses are coming back to normal. They are opening up, the markets are opening up, and we are returning to pre-pandemic levels. We, as a Takaful company, we are supposed to maintain two separate books of account for policyholder and shareholders. And likewise, we are also obliged to report the income statement for policyholders separately and shareholders separately. As of Q2 of 2022, policyholder reports a surplus of RO 34,000, whereas shareholders reported a profit after tax of 673,000. The combined profit for the company as of Q2 stands at 707,000 as compared to 1.2 million in the previous year. The main reason for the decline in the overall profit after tax is a combination of increased claims and the investment income, which has had a hit because of the volatility in the equity markets. The combination of two has resulted in a dip in our profit after tax.
No, I think one point I would like to add here to what Hitesh said. The policy holders account has done a 34,000 profit this year in Q2 as compared to a loss of 381,000. So in terms of the performance of the policyholder fund, it's 109% better than last time.
Moving on to the next slide. We here display the key performance indicators. The premium retention ratio has gone up by 1%. Last year it was 41, this year it has gone to 42%. That is again the reason of the change of the business mix what the company has adopted. Due to increase in the claims reported, the loss ratio has gone up from 54 to 61%. And yet, in fact, the combined ratio of the company has increased from 94 to 98%. However, there has been a decline in the expense ratio of the company from 40 to 37%. And even the acquisition cost as compared to the GWC has come down from 6% to 5% for the half year 2022. The company has adopted and is focusing more on the direct business and trying to reduce their interdependence on the brokers and agents, due to which you can see an increase in the direct business percentage, which was 44% last year, and this year it has gone up to 51%. Moving on to the next slide is the investment composition and the performance. Al Madina has a well-diversified investment asset book, and it is constantly monitored for Sharia compliance. We continue to adopt a prudent investment strategy and maintain an investment book of RO 28 million. 89% of our investments are in fixed income space, where a risk-free regular income can be generated. Moving on to the investment income, Al Madina has reported an investment income of RO 758K as compared to 1 million for the corresponding period. Now, I would like to bring the attention that Al Madina has been able to increase their income in Sukuks and deposit asset class on the rental income asset class. It is only the equity where the markets have taken a bang in the Q2, which has driven the overall investment income down for the company.
I think the equity income has taken a beating. It was 405, now it's 61, because of the equity not performing well, and one of our main investments not paying dividend this year.
Yes. Coming to our strengths, our share capital continues to remain well above the minimum regulatory requirement. As a Takaful company, we have to ensure that there is no deficit in the policyholders fund. However, on a year-on-year basis, we have been trying and managing the fund in such a way that deficit as of Q2 stands at only RO 436,000. And hopefully by year end, it might even be wiped off. Our total balance sheet size at Q2 stands at 108 million. Coming to the solvency margin, the company has maintained a very comfortable solvency margin over the years, which is well above the minimum regulatory requirement. As discussed earlier by Mr. Shakib and he briefed that there is a new risk-based solvency coming in place from from the current year, the company is required to prepare solvency in terms of general, medical, and family. Moving on to the outlook. As the economy continues the post-pandemic recovery, there is a conducive environment for the growth of insurance. Government has plans to develop the SME sector. This will create an increased demand for specific category of insurance for medical, property, group life, etc. Positive momentum in the oil price and increase in the company's rating will boost the economic condition, which will forecast a positive outlook for the insurance companies. On the products and the services side, healthcare insurance is one of the fastest growing segment, and it is poised to expand exponentially once the unified health insurance scheme, Damani, goes into effect, and it is expected to go into live sometime later this year. Al-Medina has focused on its customer service, and with many technology-driven innovation, we plan to reach out to our customers and satisfy them to the fullest. The company continues to invest in IT and IT process automations and digitization of all insurance processes so that anything the customer wants is available at a click of a service. The company is with its well-planned growth strategy, is well positioned to achieve a stable growth through disciplined underwriting, our expense management. We plan that we should be able to maintain our market position while increasing our bottom line and be able to display a sustainable growth and profitability for the year 2022.
So the emphasis, I'll take it from here. The emphasis is not growing exponentially, i.e. not increasing the top line always. The emphasis is on giving the best of the services to our customers, to the partners in economy development of Oman, and at the same time provide better returns to the shareholders. So that's what the plan is for the future. With that, we come to an end of our presentation today. Thank you very much for attending. We are open now for questions. If you have any questions, please feel free to ask whatever you have. I think no questions, then thank you very much.
السلام عليكم.
وعليكم السلام.
ممكن اطرح السؤال بالعربي؟
تفضل.
طيب زي كان في آخر اجتماع مع الجمعية العامة كان في مقترح بخفض رأس المال. وين وصلنا في الموضوع؟
سيدي الكريم، موضوع خفض رأس المال راجعنا فيه الهيئة العامة لسوق المال. الهيئة العامة لسوق المال وافتنا بمجموعة من المتطلبات. تم الوفاء بهذه المتطلبات وتقديم توضيحاتنا للهيئة العامة لسوق المال، والأمر متروك لدى الهيئة العامة لسوق المال الآن. أي سؤال آخر سيدي؟
أيوة، متى أنتم رسلتوا هذا المعلومات حالهم؟
ولا من فترة عزيزي الكريم.
متى تقريبا؟ يعني احنا نتكلم اجتماع الجمعية كان تقريبا شهر 3، نهاية شهر 3.
أيوة.
متى انتم رسلتوا لهم؟ انت تقول انتم خلاص يعني المتطلبات خلاص جاهزة كل شيء من طرفكم، صح؟
نعم، نحن قدمنا يعني رسالتنا بداية. الهيئة العامة لسوق المال قدموا متطلبات، وفينا هذه المتطلبات، والأمر موجود عند الهيئة العامة لسوق المال من فترة.
نعم، ما ردوا عليكم؟
لا، عندهم الآن الهيئة العامة لسوق المال نظرة أخرى في موضوع متطلبات رأس المال أصلا. بالتالي يعني ما ممكن يردوا علينا في موضوع الموافقة على تخفيض رأس المال في حين أن سياسة الهيئة العامة لسوق المال تنظر في رفع رأس المال المطلوب من شركات التأمين.
طيب زين، بخصوص لأن رأس المال الحين 17 مليون.
17.5.
17.5، وحتى أعتقد الأرباح المحتجزة ما كبيرة واجد. كيف بتكون الخطة إذا مثلا ناوي توزعوا أرباح؟
السلام عليكم. أخي الكريم، طبعا بالنسبة لتوزيع الأرباح هو نعم ينظر في الأرباح المحتجزة من جانب، ومن جانب الأرباح التي تحصل عليها الشركة في هذا العام. ومثل ما تفضل الأخ شكيب يعني CFO للشركة، الرئيس التنفيذي المالي للشركة، شرح آلية يعني العمل في الصناديق المختلفة سواء صندوق المشاركين أو صندوق المساهمين. وطبعا هنالك بعض الآليات التي أو بعض المتطلبات الرقابية التي يجب أن تتبعها الشركة قبل تحديد نسبة الأرباح التي يتم توزيعها. فطبعا بعد ما يتم أول شيء تخفيض نسبة العجز الموجودة في صندوق المشاركين والنظر في الفائض الموجود في صندوق المساهمين، وبعدها يتم تحديد النسبة المناسبة إن شاء الله إن تحقق ذلك.
انزين، انتم عندكم في القوائم الماليه علاوه اصدار، هل في خطه انكم تخلوها في الارباح كارباح محتجزه؟
And what's your plan for this year for the solution of the dividends for the shareholders? Also, you talk about the IPO, and there is also issuance. نعم نعم أخي الكريم.
تفضل.
نعم طبعا هو يعني هذا نشرة الإصدار أو الرسوم تستخدم مرة أخرى إذا يتم يعني مثل ما تفضلت أنت وسألت في البداية عن تخفيض رأس المال أو كذا، إذا في يعني رفع رأس المال أو تخفيض رأس المال، هذه الرسوم تستخدم في نفس الغرض ولا تستخدم، لا يتم تحويلها إلى الأرباح المحتجزة أو يتم توزيعها كأرباح للمساهمين.
في شركات حولت هذه علاوه الاصدار لارباح محتجزه.
نعم حسب ما ذكر رئيس تنفيذي المالي للشركة لا توجد خطة في هذا الجانب لتحويل الدراسة.
لأن أعتقد حوالي 10 مليون إذا ما خانتني الذاكرة، حوالي 10 مليون ريال علاوة إصدار.
نعم لا توجد خطة في الوقت الحالي، وآسف مبلغ كبير جدا لا يصل لهذا.
طيب جزاكم الله خير، أحسنتم. Thank you very much.
شكرا.
أي أسئلة أخرى? Any other questions?
Yes, hi. Good morning, gentlemen. Thank you very much for the presentation. Can you hear me?
Yes.
Yes.
My name is Abbas Muslimi. I work as a portfolio manager with Vision Asset Management. Thank you for the detailed presentation. I had a few questions. When you look at the sector right now, Medina Tecaful has been possibly the only company that's been, sort of growing its top line in the last few years. So that's extremely commendable. But what I can notice is the profitability. Of course, we look at it exactly the way you said. We look at it combined, policyholders as well as the shareholders' accounts combined. So when we look at that, we've noticed that profitability has been under pressure, especially this year. You mentioned that, since the COVID sort of, issue is coming to an end, people are more, open to go to hospitals. Obviously, people are driving more, and, I can see why loss ratios have gone up. Now, as senior management in this company, how do you expect loss ratios to behave given the profile of your book? You've got a very well diversified book. How do you expect loss ratios to behave? And obviously, a follow-up question to that is, what sort of combined ratios are you targeting in the next 1 to 2 years? You feel you'll be profitable on an operating level?
Yes, I think I have to answer your question in two ways. One is insurance is a risk-accepting business. You cannot predict with 100% certainty what kind of losses you will have and what kind of loss ratios you would have, but you would have some numbers to work with. And these numbers come from your historical experiences. So in terms of what kind of combined ratio we are looking at to reduce the combined ratio as much as possible, and maybe around 90 to 92%, somewhere there. The other question you asked, do we think that we'll be profitable for next 2 years? For sure, inshallah, we believe that we'll be profitable on the operational level, unless there's a gonu or there's a bigger shine comes in, that nobody can predict it in insurance business. Otherwise, we are pretty confident on that basis.
Okay, thank you for that. And if you look at this year, in the first half, you're sitting on a small loss for the combined accounts. Now, can I ask you in terms of the dividend-paying capability of Takaaful insurance companies? Because I think the conventional insurers have appropriation, which is of course legal reserve and contingency reserve. Now, what's the maximum dividend-paying capacity for Takaaful companies? I notice you don't have this contingency reserve. So how does it work? What does CMA allow you to maximum payout as dividends?
See, CMA, first of all, we are on a combined basis profitable. So when you said we are sitting or we are looking at a loss situation on combined basis, that's not right. I think you're talking about the balance sheet number maybe, where we are reducing the losses of the participants continuously. So that there we are left with a very small number, and inshallah, if everything goes right this year, we should be able to wipe that off. And if not this year end, then the first quarter next year, for sure. I think that should be possible. The other thing you asked for the contingency reserve and the legal reserve, etc. The laws for all companies are the same in Oman. You cannot use legal reserves for profit distribution or dividend payment. Even the contingency reserve is only fixed for contingencies. In insurance companies, the contingency reserve is part of the technical reserve. So it's not even available to the shareholders. It's for the policy holders. So we have various kind of reserves created. I'm sure you would know. We have the UPR, which is the matching concept of the premium. We have the outstanding claim reserve. We have incurred but not reported claim reserve. We have IBN-ER reserve. We have PDR reserve. We have contingency reserve. And they are all governed by the regulations set up by CMA and looked by our external actuary each quarterly basis. I think we are probably, we are definitely the only company who does it in the Takaaful space, and we are probably one of the very few in the market who does it on a quarterly basis. So our reserves are likely to be, if not more, sufficient and prudent.
Okay. Okay. Thank you for that.
That answers the question. It's not ask me again. Yeah, if you're not understood me correctly, please.
No, I've understood the part. I was under the. I was not sure if you had to make a similar appropriation for contingency reserve, and any leftover profit after making those appropriations was available for distribution. But what you've clarified for me is that the same laws apply for all insurance companies in Oman. I thought Takaaful companies had a different sort of law when it came to appropriation.
Correct. Takaaful companies have different regulation called Takaaful regulation. Largely talking about the Sharia principles, etc. Last year we got exemption from having a contingency reserve because we are having all the reserves in line. I said all companies have, for your question relating to the legal reserves and the share premium, etc. All companies are governed by the commercial company law, which does not allow distribution of those reserves. So my answer was particularly directed to your question about the legal reserves, the share premium, and if anybody had contingency.
Oh, of course, right. That I understand. That I understand. Thank
Sure.
you. And in the presentation, you mentioned about CMA coming up with a new sort of way to look at solvency ratio, and you said you'll try and sort of. I mean, what's the difference, and how does it impact you in terms of? Does it impact you in terms of having more capital than you need? Or is there an opportunity for you to sort of, because dividends are contingent on the profitability and retained earnings of a company, on a combined basis, but a capital reduction is something you can consider if you feel you're carrying excess capital. So do you feel,
I think
because the minimum capital is 10 million, so do you feel you're carrying excess capital at this stage?
I think you could not understand my CEO's answer to this in a way. He answered this comprehensively, but let me, for your benefit. CMA is looking at, and it's not yet final, but we had a chance to speak to very senior most people in CMA. They are looking at increasing the share capital requirement for the insurance companies across the board to 20 million, if not 25. That's what we have been told. So in terms of capital reduction, it's not a possibility in the near future because of this new thing which is coming up, maybe by the year end. The other question about me saying that the CMA is coming out of the new solvency margin requirement, risk-based solvency, they have already come out. It's already out, and this is mandatory for all insurance companies to abide by it. It will be more difficult for us because we'll have to do solvency for the three business segments separately. So it's there and we have to follow it. How it affects each insurance company depends on your business profile, because this is quite a complicated calculation. And probably I would need a day to go through and explain that, because it takes into account the market risk, the credit risk, all sorts of risks, which was there in, if you're aware of Basel III in banking. It's based on those concepts, and it will require possibly a computer program to calculate. On a rough calculation basis, I can tell you the requirement will increase of the capital. So my understanding is, for our kind of business and our size of business sector, we probably need 16.5.
Very, very clear. Thank you for that. And my final question, sir, is,
sure.
You spoke about the mandatory sort of health insurance going live at the end of this year, possibly sooner. But my question is it true that only a few qualified companies will be eligible to offer these services on the CMA platform? Or and do you feel like Medina Takaaful would be a front runner to be qualified to offer this?
This is true. This is my understanding. I can't say on behalf of CMA it's true or not, but that's my understanding, that they will select only a few. And whether Medina Takaaful would be a front runner or not, again, it depends on CMA, but I believe that since we are one of the two Takaaful operators in the market, they will have to give it to us.
Understood. Very, very clear. Thank you very much for the clarifications. All the very best to you, and look forward to interacting with you.
Thank you.
Thank you.
Any other questions? Are there any other questions? Thank you very much.
Thank you very much. We end our presentation with that.
Thank you.